As COVID-19 swept the world, we've had the phrase the new normal thrown at us from politicians, health organisations and corporations. But what does it really mean when it comes to the captive industry, and what changes can we expect now and into the future? I'm Lauren Ingram, editor of Captive Review, and welcome to the latest session in Captive Review's virtual symposiums called Adjusting to the New Normal, sponsored by Invest Barbados. A little bit of housekeeping before we start. This is an interactive event, so we have a poll and also the opportunity for you to ask questions. To vote in the poll and ask questions, simply visit the website slido.com and enter the hashtag CaptiveVirtual. So just to repeat that, you just have to go to the website slido.com and enter the hashtag CaptiveVirtual, so you'll be able to interact with our panelists. Before we get into the panel, we've got Kay Braithwaite, the CEO of Invest Barbados, who's going to give us an update on what the organisation has been doing recently. Over to you, Kay.
Thank you very much, Lauren. Before we start, I want to say thanks particularly to Captive Review for allowing us to partner with them in putting on this webinar to update and advise or attendees in terms of what Barbados have been doing during the worldwide pandemic. Lauren, you mentioned a new normal. Yes, it has been quite a change, and I guess for everyone around the world. And of course, for Invest Barbados, we had to look at how we reach out to our customers, how we reach out to our investors, how we keep everyone abreast of what was going on. And I think that is actually one of the most important things that we try to do during the time, is to keep everyone here existing, as well those persons who would have been overseas but have as companies here, and concerns in terms of what was the changing protocols and regulations as we went through that period of time. I'm happy to say that at the moment Barbados has reopened its doors, but obviously following some very strict protocols, as we continue to see how we can all survive in this new form of operating. I want to say welcome to everyone, all of the attendees on the webinar today, and I hope that when we finish the session, you will be able to go away with a lot more insight in terms of what Barbados is doing and how we continue to operate to ensure the mutual success of Barbados and as well as your businesses. And I also want to take a time out just to say thank you to our esteemed panelists for giving up your time to come on this webinar with us and to chat to our attendees. I am sure we will all be well informed by the end of the session. So back over to you, Lauren, and thanks again.
Thank you so much, Kay. So our topic today is the new normal, but we're going to get you to vote in a poll first. So if you want to go to slido.com, and we have a poll if you'd like to start that before we start the panel. So it's, do you now or have you ever had a captive in Barbados? Yes, no, not a captive owner. So if you can have a vote on that, we'll have a look a little bit later in the panel to have a look at what everyone's been talking about. So now I really want to introduce our panelists. We have a really great panel today. So we've got Kester Guy, CEO of the Financial Services Commission in Barbados. We've got Ricardo Knight, Senior Vice President of Marsh Captive Solutions in Barbados. And we have Wayne Fields, President of the DGM Financial Group. Thank you all. Thank you for being here. To start this, I just want to ask the very broad question of how has the combination of COVID-19 and the hardening market impacted the captive industry in 2020? And what changes are you seeing? So Ricardo, if you want to start us off.
Sure, Lauren. I mean, COVID-19 and the hardening of the market, I think that's like the perfect storm we had. I mean, we were expecting, contemplating the transition of the insurance market with expectations that with the hardening we would have seen lots of new formations this year. So that was in our head, but then we had COVID-19 adding to the mix, which obviously brought its own challenges. I mean, what we are seeing is obviously with increased prices and reduced capacity, is forcing risk managers all over the world to consider other options. And I think captives come in as a self-insurance entity that can allow these companies to retain some of their good risks. They can look at what risk they have in their books, and I think it allows them now to those who haven't set up captives to think about setting up captives, and those who have existing captives to look at writing new lines. So that's what we've been kind of seeing. We've been seeing more captives and more cells forming. As I mentioned, expansion of existing captives, taking on more retention and adding more risks, both traditional and non-traditional risks. More premiums being written, expanded lines, and the whole COVID issue has also allowed captives to optimize and show their flexibility. I think we're seeing captives now that have excess liquidity, they're able to pay dividends to their parent companies, and that liquidity can be used to assist the operational companies, because lots of companies are struggling with cash flow. So dividends from the captives that have excess surplus can be used in that form, and also loaning funds back. So you can loan funds back to your parents as well, and that could assist with the cash flow in the operational companies who have been hard hit. So captives, I think, are stepping up to the plate and showing their worth in this hardening market as well.
Yeah, I think that's something that I've heard continually, that a lot of people don't realize exactly how the captive can support the parent in times like these. So obviously it's a great risk management tool, but also it can do so much more for a parent organization when they might need some cash, they need some capital, especially in a time like this with organizations that have been so hard hit and been unable to operate. So Wayne, do you want to kind of weigh in on this and COVID-19 and the hardening market?
I mean, I think, you know, to go on from what Ricardo has said, I mean, we are seeing an reduction in the levels of cover in some of the areas of risk that typically are being covered, particularly in the area of directors and officers cover. We have seen a significant decline in what they're prepared to cover, the levels of cover. At the same time, we're seeing a significant increase in premiums. And in some areas, I was involved in a case recently trying to get D&O cover for a life company. And it is becoming even more difficult in the area of life companies. So we will see more captives taking on more of that sort of risk, for sure. The other area that we've seen some adjustments to is how we function during the last 3 or 4 months of the COVID-19 lockdown. Most of us have had to work remotely. And so a lot of meetings would take place by Zoom rather than in any other format. And as you would appreciate, there are many board meetings that would normally take place in Barbados as such have been held by electronic and digital means as such. Similarly, the regulator has had to has moved for us to file on a digital basis, so to make sure that we continue to file within the regulations as such. That has been very helpful to us in being able to file our quarterly returns and so on online. In addition, I have to say to the regulator that for new applications where we're trying to have a meeting with the regulators, they've been very helpful in using Zoom or other digital means to have those meetings. So again, it's all new to us in this sort of world that we're living in. And I agree with Ricardo that I think we're already starting to see new applicants coming in for the establishment of captives and typically I would say it's in areas where capacity is needed, or where there just isn't cover out there in the traditional marketplace. So we are seeing a considerable amount of new business as a result of it.
Yeah, I mean, you mentioned D&O, and I know that Marsh put out a report the other week showing that 95% of insureds had their D&O cover increase in Q1 2020. So obviously, I think with the hardening market, we're seeing a lot of lines, as you mentioned, kind of get a lot harder, which is pushing people to captives who may not have considered it before. So Kester, what has been your experience when it comes to the hardening market and COVID from a regulated perspective? What have you been seeing? You're still muted, Kester.
That's fine. Hi, good morning. Yes.
Hi.
And, it's indeed quite an exciting time, as alluded to by the previous speakers. It's an area of unknown or unfolding realities. So we have been, both Ricardo and Wayne, we consider them being on the front line as the direct engagers of many of the captive stakeholders or entities as management companies. And so we will have follow through from them as to things that are in the pipeline and engagements and new entities desiring to register and things of that nature. Certainly, we have been very facilitating in meeting with various stakeholders via whatever means to outline regulatory requirements and regulatory perspectives so that entities can come in fully briefed and fully aware of the considerations. And the idea is to do this in an expeditious manner so that business can be minimally disrupted or impacted because of regulatory frictions. Yeah. What we've indicated and we consider is from the regulatory perspective, we consider the risks that are being undertaken, and we have a view when it's fully self-risk versus if the risks are counterparty or non-related party risks, and our regulatory perspective on that will either speed up the engagement you have with the regulator, or so let me put it in the other way. Because our primary focus would be on consumer protection or systemic risk, and due consideration to issues relating to AML and fitness and propriety of the UBOs. Those are broadly the parameters to which we will provide guidance. If you are doing self-insurance and then there is no other third party at stake, then in a pure captive arrangement, that's a swift arrangement that probably can be done within a week if all documentations are submitted. However, if you have third-party exposures, we would have to make sure that you have the right safety nets and the right protocols to ensure that no consumer or third party might be undone in any way. But if your system, again, your program is well developed and you can demonstrate that you have provided sufficiently that third parties are not going to be dealt with in any untoward way, then that process can also be expedited. So broadly speaking, we have been seeing several interests. We have had about a 15% increase in new registrants compared to the previous year. And based on our discussions with the managers, the captive managers, it seems as though it will continue to be a very developing sector. As the regulator,
I mean, 15%. Sorry, apologies.
I said, as the regulator, we stand ready to engage and to provide all guidance as we navigate the environment with all our stakeholders.
I was going to say, 15%, that's quite a significant increase. And obviously, I think part of that is due to the hardening market, but there would be other factors like COVID coming into play. And so Wayne, you mentioned it before, and obviously we've just been talking about it with Kester, but regulation is such a big part of forming a captive. And, if you've got 15% increase, there's a lot of people that are either adding new lines or they're coming into captive area for the first time. So, for example, if we have a look at our poll, we can see that, let me just pull it up. Apologies. The majority of people who are here have not had a captive in Barbados, which means that we've got 47% saying no, they haven't had a captive, 47% saying they're not a captive owner, and 7% saying that they have now or have had in the past a captive in Barbados, which means we've got people in the captive industry, but who may be looking at different things as we go forward. And some domiciles, as you mentioned, have relaxed restrictions on in-person board meetings and introduced digital filings. Given there are other things to consider, such as solvency requirements, do you think that things will change in the future in different places to make it more digital friendly for the captive industry? Do you want to start, Wayne?
Sure. Lauren, while one would expect going forward more digital meetings to accommodate clients and make life more simple and easier, there are issues out there that going forward we will still have to have in-house board meetings. Now, we've used the digital systems during the COVID period here to have meetings, but there are issues going forward. So some countries will require that the meetings be held outside of their territory for tax and regulatory purposes, and so that will still be required on a go-forward basis. And while, for instance, I understand that Canada has given some relaxation on Canadian directors being resident in Canada during some of those meetings, typically that would be something that would not be an acceptable situation from a Canadian tax perspective or regulatory perspective. So I think in the future they will still continue to have meetings in-house. Similarly, Barbados and all low tax and no tax jurisdictions have introduced, as a result of the OECD review, economic substance legislation. And again, that legislation requires that the majority of directors meet in Barbados to make decisions pertaining to the company and so on. So that will continue as such. I think where technology will come to the forefront is where one can use artificial intelligence to assist you with the underwriting processes or claims processes, or trying to understand what customers may require. And through the gathering of information on a digital basis will make life, will give you more opportunities to understand what their needs are as such. So the digital use of digital systems will be very helpful in some of it going forward, for sure.
Kester, your thoughts?
Most certainly. And so regulatory considerations have been relaxed broadly given the context. If I just take a broader perspective on business continuity, from a regulatory perspective, when there are stresses in the system, this is not, the COVID reality is not, wasn't brought on by any, was brought on by something that was exogenous to each of us as an individual or each of us as a company. And so the relaxation of filing times, for instance, allow companies to the time to navigate their own circumstances to provide filings. And in collaboration with the International Business Unit, we would have released broad guidance that's saying we will facilitate and allow board meetings and other types of arrangements to be facilitated via Zoom and other platforms, and that wouldn't be seen as something that would compromise the substance tests, as Wayne alluded to earlier. But broadly speaking, because of these broader regulatory requirements, either imposed by other OECD and other global let's call them watchers, those who would look into peer into our systems. We need to make sure that we are doing our part to be consistently compliant with all the standards that we have agreed to. And so while a specific event might allow us to relax certain requirements, the broad requirements will still be required to be upheld or adhered to as we come out from the difficult event or situation or circumstance. So from a business continuity, there is considerations for shock events, but when those shock events have been settled, then in terms of compliance, you will go back to what is appropriate. In the same time, as we utilize technology and we discover new ways and medium for information exchange, submissions of articles, we would adopt those things that can be sustained. So if you are dealing with the FSC, you no longer have to supply us with hard copies of anything. We will accept all electronic versions for applications and whatever other engagement you would want to have with us. So there are some matters that are requirements, and then there are some matters where we can use technology to improve efficiency and functionality, and we want to embrace them all. Things that can be done smarter and wiser, we are happy to encourage, but the things that we have to do to ensure that our jurisdiction is in compliance with global standards, that we must do as well.
And I think that's a trend throughout a lot of industries that, this, as awful as this is, it's kind of forced people to do things a little bit differently. And then they've said, well, okay, then this works. We noticed that maybe some of the apprehension we had before because there are risks hasn't happened. So we're okay to move forward in a different way. And that's a really great thing because it makes it easier and quicker and easier for both regulators and managers and captive owners. But as you said, there are some kind of requirements. So Ricardo, what has been, do you have anything you want to add on this and about, moving to new ways of doing things?
Yeah, I mean, I'm in agreement with basically what Wayne and what Kester said. I think we have to embrace the positive things that came out of it. I think one great positive that I found many clients were keen on were the ability to provide compliance information via digitally, KYC information, validation of IDs, and there are more secure forms via using the technology to do that. So you have clients that may be in the UK or in Europe or in the US, they can digitally the information to the regulators and also to the banks in a timely fashion. So it kind of speeds up the process. And so I think if we can embrace those things that were positive coming out of COVID, that would really help. I mean, during the whole process, many clients as well were forced to digitize. I mean, they're no longer wet signatures. Everyone was getting into the digital platforms at the commercial banks to process payments. the investment managers, all of us were working in really a digital environment, and it worked really well. I know the current administration is really pushing a digitization of government. The Ministry of Information and Innovation and Technology have been really driving that forward, and they're looking at, you know, digital ways of making payments for licenses and permits and throughout the whole system in Barbados. So we are really looking to push a paperless environment. I mean, one that we've embraced at Marsh for a long time, but it's good to see that the entire community, because you can't do it, no one part of the community can do something. It has to be fully embraced for it to totally work. So we're really pleased to see that there's some positives coming out of COVID, and we're happy that is happening. I mean, it's cost effective, and it saves time.
Yeah, and I think for anyone in the industry, anything that both saves time and money is going to be really, you know, really appealing. So, you know, as we've spoken about, there's an increase in captives, an increase from the conversations I've been having of people who already have captives but are looking for new lines because the pandemic has, you know, seen holes, and because of the premiums going up, they want to add things. And obviously one of the biggest things when you're having a captive is deciding what domicile to put it in and how to structure your captive essentially. So when it comes to where to go, what is your best advice for captives considering a bunch of other places, if you want to start, Ricardo?
Really, there are lots of great jurisdictions out there, and they're all competing for business. What you're really looking for as a potential captive owner is the reputation of the jurisdiction. You want a jurisdiction who's been tried and tested. I mean, Barbados is obviously a good one. They've been around for almost 40 years now. So you're looking at that regulatory environment. You're looking at the service providers that are in the jurisdiction. You know, you want to make sure you have all your major players there, the Marshes, Aons, the large companies, and also the great independents. You're looking at the banks. You want to make sure you have a solid banking infrastructure. I mean, Barbados has been positive in that perspective, in that we have the large Canadian banks, so there's been that affinity to the Canadian business. And you want to look at capital. Capital is important. You want to make sure that, you know, capital is reasonable and is proportional depending on the risks. What the regulator was talking about, you know, if it's your own risk, there's a certain expectation. If it's third-party risk, there are other expectations, but there needs to be certainty around that as well, across, because what happens is there's a shopping list of jurisdictions that potential captive owners look at, and they look at and see what is offered in each jurisdiction. So to be competitive, you really have to, you know, be competitive. So you have to look at that. Premium taxes, if they're premium taxes, the level of income taxes, respect and experience of all of the performers in the jurisdiction, the ability to write direct business, that's important, and the distance to the parent, how close you are to the parent company, is important as well, because of those trips you have to make to satisfy substance and things along those lines. And whether they have protected sale legislation, that's becoming important to some people as well, where you can have a share in a smaller, in a captive, if you're a smaller insurance player, a smaller company, medium-sized company, then the possibility of having protected sale legislation is important. Responsiveness as regulator is important, and we spoke about that. We've been have, you know, the ability to be able to have access to your regulator and speak to them, and their attitudes to captives, you know, being able to recognize proportionality, you know, as he mentioned earlier, and I stressed it again, if it's a pure captive, you recognize that that risk is not as it's not going to cause any systemic risk to the entire environment, and you also look at the professionals involved and the experience of the sponsors, and you weigh proportionality to that as well. So I think that's important. And another one I think is, again, time is money. Speed of establishment, and we have to look at that, because many times within the captive group, people will come to you and ask you, how quickly can you get this set up, especially with COVID and stuff. People want to put certain things in place, and they want to know how quickly you can get it established. So having some certainty with regards to process is important, because then you can give commitments that it can be done in this time, as opposed to other jurisdictions who may say a different time. And once you give that commitment, sticking to it. So I think that's important. Barbados is fortunate as well that it has double taxation agreements. So those types of treaty things could add to the whole mix. But I think those are the kind of things you look for when you're looking at a domicile choice.
And I mean, you mentioned protective cells, and as you said, that's becoming more and more popular for a lot of people, because if you don't have a big enough parent company, but you want to get into the captive space, that is an option. And more of the smaller organizations are looking at that, because previously they may have thought, well, a captive is a good risk management tool, but the parent's not big enough, we can't do it. Wayne, what's been your experience in this area, and have you seen more interest in different domiciles, or what do you think?
I mean, I'll start up by saying what Ricardo said, that there are lots of good jurisdictions and domiciles that are wrong. So I'm not here to be critical of any domicile as such. Barbados, I think, has a number of things that, from my perspective, do stand out, that some of the other domiciles may not have. And Ricardo touched on the base that we have tax treaties with many countries. I think there's something like 45 tax treaties we have. That may be of benefit to a client to have their captive in Barbados, where they may be able to get benefits through the tax treaty that other jurisdictions that don't have tax treaties cannot get those benefits. We also have investment treaties, and those treaties are very good from a protection point of view as such. The other things that I think Barbados has is that we've always had a much larger population than many of the jurisdictions in our area, and a very well-educated population. So we are able to recruit, whether it's in the accounting firms, lawyers, management companies, and so on. We can employ local people who have the experience and knowledge to develop. That's a much less expensive way of going about employment than if you are in a jurisdiction that has limited populations, where you have to bring in a lot of international people. You're bringing them in at a much higher cost level, work permits and various other costs that pushes up the cost of doing business. That certainly, I mean, I can tell you I was a partner with PwC for many years, and we had 200 staff, and with the exception of 3 or 4 people that we have brought in to fill holes that we couldn't fill at the time locally, we're all locally employed. We are all at DGM Barbadians employed. So that does give quite a significant cost benefit as such compared to other jurisdictions. And the other thing, of course, is the Barbados dollar, relatively speaking, is weak compared to the other jurisdictions. So when you convert our costs in Barbados dollars back into US or whatever currency you want with other jurisdictions, I think you will find that Barbados is probably 30% less expensive than some of our competing jurisdictions, simply because of those two issues as such.
Yep.
The other thing that we have is that captives that are setting up in Barbados want and require, or let's say require, the owners normally want the majority of the boards to be resident in Barbados. And we have, again, due to the size of our total community, we have a lot of business people, senior business people who have either still in senior positions or retired, who have a lot of extremely good business experience, and some of them with insurance experience, that can sit on the boards and really make a very significant contribution to the captives' experience in Barbados, and be a meaningful part in meeting the economic substance test and so on. So some of those are some of the advantages I think we have. We have a good, we're independent, but we're a British colony, so our laws are very much based on the old British laws. So we have good law and order that people can feel comfortable with, and we've always had political stability. So I would say those are the things that I see, and certainly my clients, when they come here, they really enjoy Barbados. They feel it is, a country that has quite a lot to offer, both entertainment and good hotels, restaurants, whatever. So those are added features that can come along with it. But I think the issues that Ricardo spoke about and what I've said, I think really adds quite a lot to the Barbados solution.
Yep. No, I agree with you completely, Wayne. I mean, only yesterday I had a client, a UK client, which is setting up an insurer in Barbados, and they've decided that they want to have the binding done in Barbados, so they need an underwriter. So we're going to be seeking an underwriter in Barbados. I know I'll be able to find someone quite easily in Barbados to fulfill their needs. So you cannot stress the people too much. The people is a key factor.
And Kester, I guess I know where you stand in terms of domicile. So just, yeah, very, very quickly to you.
So from the regulator's perspective, we leave that to the managers and the persons. All our regulatory regimes and responses are consistent with all the international standards, and we try to ensure that from a regulatory perspective, there are no gaps, and we engage with all our stakeholders to identify them where there might be areas that we may have overlooked, or areas or issues that might be developing for which we need to address. And so, strictly from a regulatory perspective, these are my few words as it relates to our response.
Thank you so much. So looking forward, because obviously this is about the new normal and how it's going to go not only now but into the future. So obviously we're seeing an increase in captives. What do you think will be the biggest opportunities for the captive industry moving forward? Is it particular lines? Is it, protected cells? What's going to be a big focus? So I'll throw to Wayne first.
Thanks, Lorraine. Yeah, I mean, I think we've touched on some of it in some of the earlier points, but I think certainly what we're seeing is a capacity need. Given the reductions in the cover limits that the traditional market is providing and the increased price for those limits that they're getting, we're seeing a definite increase in areas where that capacity is an issue. I have one from dealing with a life cover where the particular it's very much a private placement type policy, where in the jurisdiction in which the insureds live, the traditional insurance company, life insurance companies in that territory has a limit on how much they are prepared to underwrite an individual for. And many of the high net worth individuals need a larger cover than that. And so we've established a company here or we're in the process of establishing a company here where we are developing the capacity for those people to be able to get cover for levels in excess of what the market in their home country prepared to or will provide. So we see that as such taking place for sure. Again, I think we are going to see, and I've had a bit of experience with a particular client where artificial intelligence is really being used in the whole underwriting process at the parent level, because the parent is an insurance company as such. And they have developed the artificial intelligence here in Barbados. And it has really made the parent company in that jurisdiction quite a standout within the industry. And of course, we are reinsuring the parent here in Barbados. So I've seen what the artificial intelligence is doing in that sort of area as such.
Oh, sorry, apologies, Wayne, continue.
Yeah, and we're also seeing one which we're in the process of licensing, looking again to use quite a lot of digital type systems. They are going to be selling health insurance in certain parts of Latin America, and a lot of their processes are digitized as such. So we are seeing change for sure.
And Ricardo, what have you been seeing in the industry?
What we've been seeing in Marsh Capital Solutions has been working and designing programs to deal with pandemic risks, not just COVID-19, but pandemic risks in general, to deal with future pandemics. Programs are designed to reduce the economic impact of a pandemic by providing some revenue and employee protection for companies and individuals. The process obviously involves an initial assessment where we look at it, followed by the implementation of a captive insurance policy. Reinsurance capacity is expected to increase in the future in that area, and we're working on these options now. In addition to the current pandemic, we know that the hurricane season, we're in the midst of the Hurricane 2020 Atlantic hurricane season, is expected to be more active than normal based on respected modeling that's out there. So in addition to pandemic risk solution, Marsh Capital Solutions is working with Guy Carpenter on a parametric insurance solution. It's called Create Cube, and for companies with global earthquake exposures. So it uses modeling to provide clients with some sort of transparency and speed of settlements, as well as a parametric payment if there is an earthquake that meets specific requirements in specific locations. So it kind of gives you a payout if these particular events take place. So those are the kind of new things that they're working on. But I mean, with the pandemic, we are thinking like how, you know, when there was 9/11 and there was the terrorist insurance that came about because it was difficult to get terrorism insurance after that. And then we had the TRIA, the Terrorism Risk Insurance Act in the US and in other places that had different types of terrorism coverage, which is a public-private kind of deal. We're seeing that there will be similar types things for pandemic risks, and we've seen the PREA Act bill being introduced into the US. And again, that is seen as a private partnership kind of thing, and captives can have an involvement there, possibly at lower deductible layers. So we're seeing that as well as property excess liability, D&O cover, which we spoke about earlier. With the increases in prices, we're seeing those being placed into captives as well. But it has to be done very carefully, and product liability and professional indemnity as well. So we're seeing lots of stuff across the captive landscape within the Marsh world in that regard.
And I know, Priya, I mean, I've been following it quite closely, as I'm sure many others have been. And there's also, you know, similar proposals for a kind of government-backed scheme, as you mentioned, like TRIA, in Europe as well. So it will be very interesting to see how that goes forward and how captives can be involved if they want to be involved for this pandemic risk. So Kester, do you have any thoughts on this? I know you said, you know, 15% increase in captives in Barbados. So do you think there may be more coming on this year?
To be quite honest, the persons to tell you those pipeline and those more would be the captive managers, who would be the you know, direct interface with those entities. And so, yes, based on what we have been discussing and what we're hearing on the ground, there is a keen interest in some of these areas that both Wayne and Ricardo has eloquently outlined. And persons are also adding classes of business. I can say some of the things that we have seen as well. Entity might have started with one particular area, and because of such positive outcomes, they're now adding various lines to their existing framework. So all of these are strands of activity that are taking off, and as alluded to earlier, because of different arrangements in cover, the cost for commercial cover in certain areas, persons are now looking at alternative risk management tools to give them the best options that might be available to them. Certainly with their professional guidance, their counselors and their advisors, it's clear that captive solutions appears to be one that many who have not previously considered are considering.
Thank you so much. So we've got a few questions that have come in. So we're going to go to our Q&A portion of the panel. So one of the popular questions is there progress in allowing Barbados captives to insure a cannabis business, including medical and recreational cannabis, if legal in the foreign jurisdiction? So I guess I'll pass to Kester first on this one.
So our first response to that is the legislation as it relates to medical cannabis has already been passed. I think the only outstanding matter was the proclamation, and I speak subject to correction whether or not that has in fact occurred. Once that has occurred, there is absolutely nothing stopping the advance of this type of activity in Barbados. I can say that there has been a lot of work given to the setting up of the entity that will be administrating over the operations of medical cannabis and the regulation of medical cannabis in Barbados. Only 2 weeks ago, we would have had certain types of training arrangements with them, passing off guidance in terms of regulatory perspective and things like that. Our policy stance is one that has been declared by the government in no uncertain terms, and we are very facilitating and open to executing the details as it relates to those matters. But our starting point has to be the overarching legislative framework, and once that is fully settled, then the doors are fully open.
Yeah, fantastic news, I guess, if there's anyone who is looking for that. Ricardo or Wayne, have you had any interest in cannabis captives? I know there's been a couple set up in other domiciles, but it's really quite a new emerging risk.
Lorraine,
Yeah,
we've had a few potential clients contact us in connection with it. And unfortunately, until legislation is passed, it really is a situation that at present cannabis is illegal in Barbados, and so we could not deal with it. But I know that the government has been working to put legislation in place, and Castor just said that as far as he knows, all we need is for the legislation to be proclaimed. I think once that happens, we will see a significant number of opportunities coming in from that, not only from an insurance point of view, but I think from some of the other activities that we provide in Barbados, non-insurance, we'll see interest in that also. Yes.
Ricardo?
Yeah, no, I echo what Wayne is saying. We got a ton of interest initially when, obviously because of our connection with Canada. When Canada legalized cannabis, we obviously got lots of inquiries with regards to the insurance related to that risk. And obviously we couldn't do it at the time because it was illegal in Barbados. What we are legalizing, I must caution though, is medical marijuana. So recreational marijuana products still will not be able to be covered. So that's just a caveat.
And we've got a question to say, which I feel like a lot of people have been talking about. So what's been your experience with reinsurance renewals this year? Will it get better? Because I know that, you know, we had renewals recently and a lot of people had some kind of difficulties and some increases in premium. So Wayne, have you seen that?
I mean, well, we've been through a number of renewals, depending on the risk that's being covered. Some have gone very smoothly with no significant impact on the levels of cover or the sort of premiums and so on that we're involved with. But I would say to you that we've also been through some renewals with, I go back to D&O as an example, because I've had a number of D&O renewals recently. And what we've seen is certainly some reduction in the cover, but a significant increase in premium. And I am now putting together a new captive that's going to, as I said to you, was going to be dealing with life insurance, a very high end. And we're trying to get D&O cover, trying to understand what the situation would be. And the initial reaction was, it's very difficult to get. We will get it, but you know, it's just going to take time, and I'm not sure what levels of cover we're going to get, and what the price is going to be.
And I'm going to try and get through this because we have a bunch more questions, and I don't think we're going to have time for all of them. So Ricardo, unless you have something urgent to say on that, I might move on. Okay. So from what sectors is the majority of captives coming from? I'm assuming they're talking about Barbados. Rather, in what sectors or industries do the parents operate? So Kester, do you have any information on this?
Yes, certainly. So broadly speaking, we have a majority of captives from Canada, and we do have some interests being picked up from Latin American areas. There are US related entities and some entities out of UK and things of that nature. In terms of broad areas of the parent, I mean, that's quite dispersed. There are things from oil and oil to general property. There are life elements. There are various types of liability and employment risk cover. So it's quite dispersed, and you know, persons are just utilizing it in their risk management toolkit for whatever purposes they are. So in other words, there's very little limitations, and it's widely distributed. Just think about whatever line of business there is captive. I mean, I saw one time a captive arrangement for a race car driving while moving from storage to the racetrack. You know, so that if there's an accident while it happens during that thing, there's cover for that. So it's very, very dispersed.
Ricardo, do you have anything, I guess, across Marsh? Is it any industries or sectors that are a bit bigger when it comes to having captive in Barbados?
Generally, we cover most of the areas, as Kester said. So it's a very broad base as far as lines of cover and areas. So we have food manufacturing, we have oil and gas, we really cover the wide gamut of industries when it comes to captives.
And we've got one question, so we might quickly get an answer to this. So what is going to be different for given COVID for organizations getting into captives now? So what might be different from someone, you know, a year ago getting into a captive? Ricardo, it's a difficult question.
I guess we would have is, you know, I think COVID, until we get a vaccine or we get a therapeutic that's really working well, you know, a lot of we're going to be operating in a digital environment for as much as we can. So there won't be as much, I guess, trips. But as we've discussed throughout the entire webinar, it's pretty much business as usual. I think most of us worked a lot harder during this session. I guess it's not a far commute across the hall to get into your office in the morning, and so I think you're not really, you know, it's not going to affect us terribly. I just think the way we interact as far as meetings will change, but as far as physical distancing, but I think the captives remain very strong and relevant within a COVID world.
I mean, yeah, we were speaking before about how the big differences is just a lot of Zoom calls as opposed to being able to walk across the office and say hello to someone. So I think that will be the biggest change. Then, but look, we've only got a couple of minutes left, so I'm going to end that now. Mike, your question about regulators allowing virtual meetings and electronic signatures. I mean, Esther addressed that and how there will be a lot more digital ways to file as opposed to doing everything, you know, in hard copy, but that there are some things that won't change because of substance requirements. So with that, I just want to thank everyone for attending, both our panelists and also everyone watching. And I hope you have a fantastic day, and just thank you so much for such an informative session.
Thank you.
Thank you very much.
Thank you very much. My pleasure.
Thank you very much.
Thank you.